Do you know what a preferred stock is and why it might be a clever choice for some investors? In this lesson, we're diving into the exciting world of preferred stock, a type of investment that might tickle your fancy. So, you've probably heard of buying shares of stocks in a company, right? But preferred shares are a special type of stock that works a bit differently. Imagine being in a club where you get VIP treatment, like getting paid before others and having more security on your money. Well, that's kind of how preferred shares work in the investment world. Let's break it down. When a company wants to raise money, they can sell pieces of ownership in their business known as shares. The cool kids in the investing club, known as preferred shareholders, get paid first before the common shareholders, especially when it comes to dividends. That's the money you earn just for holding the shares. Now here's where it gets really interesting. Preferred shares are like a mix between stocks and bonds. They're less risky than common shares, but are more adventurous than bonds. It's like having a safety net as a preferred shareholder. You're the one first in line to get your investment back if the company has to shut down. But wait, there's more to consider. Each preferred share comes with its own set of rules, written in something called a Certificate of Designation. This important document tells us all the special terms for your preferred shares, like how your dividends work and whether the company can buy back its shares. Now, not all preferred shares are the same. Some might have fixed dividends, meaning the payment won't change, while others can adjust based on certain conditions. It's super important to read and understand the certificate so you know exactly what you're signing up for. Here's the catch though. The world of preferred shares isn't as vast as the common stocks or bonds, so you'll need to do some detective work to find the best deals. And remember, companies like issuing preferred shares because it helps them keep control while raising money. Smart, right? But be cautious. Sometimes if a company goes through tough times and has to close, the money might be all used up before it reaches the preferred shareholders. That's why it's always good to think about the risks involved and ask questions before making your move. Have you ever wondered where preferred stocks might fit into your investment portfolio? Understanding this can help you diversify your investments and potentially increase your financial security. So let's dive into the world of preferred stocks and explore how they can be a valuable part of your asset allocation strategy. Preferred stocks, also known as preferred shares, are a bit like a hybrid between stocks and bonds. They offer features of both. Like stocks, they represent ownership in the company, but they pay a fixed dividend, similar to interest payments you receive from bonds. This unique combination can make an attractive option for various reasons. Income generation. If you're looking to generate steady income, preferred stocks might be for you. They typically offer higher dividend rates than common stocks, which can provide a consistent income stream. This aspect can be particularly appealing to retirees or those who are looking for regular income from their investments. Reduce volatility. While they're not immune to market changes, preferred stocks often experience less price fluctuation than common stocks. This stability can be comforting if you're a more cautious investor who prefers to avoid the roller coaster rides in the stock market. Diversification. You've probably heard this, not wise to put all your eggs in one basket. Preferred stocks can help you apply your wisdom to your investment strategy. By adding them into your mix of assets, which might also include common stocks, bonds, and other investments, you can spread out your risk and potentially insulate your portfolios from significant losses that can occur in one asset type alone. Priority in payments. In the case of a company's bankruptcy, preferred shareholders are ahead of common shareholders in line for payouts. While they're behind bondholders, having that priority can mean you're more likely to recoup some of your investment if things go south. However, preferred stocks also come with considerations and risks. For example, companies can skip dividend payments on preferred shares, and while preferred stockholders are ahead of common stockholders, they are behind bondholders if the company goes bankrupt. Additionally, preferred stocks may not appreciate in value as much as common stocks, and their prices can be sensitive to changes in interest rates, especially when they go up. So, where do preferred stocks fit in your asset allocation? They can be a middle ground between the aggressive potential growth of common stocks and the conservative security of bonds. If your investment goals include steady income, moderate risk, and portfolio diversification, preferred stocks could be a valuable component of your strategy. To wrap it up, preferred shares can be a fantastic way to invest. They offer benefits like potentially steady dividends and lower risk compared to common stocks, all while making you feel like a VIP in the investment world. As long as you do your homework and make informed decisions, stepping into the world of preferred shares might just be the start of an exciting investment journey. So, are you ready to explore this path and see where it leads? Happy investing! Remember, it's always wise to consider your financial situation, investment goals, and risk tolerance before making any significant changes to your portfolio. Consulting with a financial advisor can help you make informed decisions that align with your long-term objectives. With careful planning and strategic choices, you can build a portfolio that serves your financial needs. This is not to be construed as financial advice. Thanks. Withdrawal Investing Insights, signing off.